Yo, 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 what's good, mi gente? You know who it is, Joel El Tico. And today I want to talk to you guys about why buying stocks is so overrated. I'm going to show you guys a better strategy to make a little more money, way more money actually, in less time. So if you guys are interested in my strategy that I use to make twice, three times, sometimes even 10 times my money, stay tuned, guys. So I'm going to start by talking I started buying stocks maybe like around 2 years ago. I was buying and holding, expecting to have returns, say returns like whatever, 2%, 8% a year or whatever. And I had a lot of money into it, well, it was a lot of money for me. It was maybe like around maybe $5,000. It was kind of a lot of money for me at the time. And I saw that I didn't get that much of a return. I was getting maybe like what, $20 a month on dividends and all that. So I didn't really like buying stocks, to be honest. So that's what I started like looking into options. Yeah, like investing your money in the stock market, like buying and holding, and then just waiting for the capital gains, when the stock goes up, and then dividend payouts. It takes forever, to be honest, to make money, guys. Like, forever. So, I don't know, but it's just me, but I don't like waiting. If I want money, I want it right now. So I started looking into options trading, like I told you guys in my last video. If you guys haven't checked it out, the link is right here. So, yeah, that's what I did. I started looking into option trading and then all that. And then I learned the options trading is way better. So yeah, guys, why should you care? Because you might be in the same position that I was, 2 years ago. Like waiting and waiting and waiting and waiting and waiting until you make your money. Like that's not how I roll, guys. So I want to show you guys what I do and my strategies to make money, and then why I like it, basically. So let's get started, guys. Options trading is basically you got the right to buy or sell a stock, but not the obligation. So what does this mean? Let's give an example, right? One contract for options is 100 shares. You're controlling 100 shares. So, and if you think about it, like Apple right now, like if you want to control 100 shares of Apple, they're like trading like 282 right now, I think. So if you guys want to control 100 shares, that's going to be around
Boy, if you don't.
Sorry, I'm really bad at math right now. I just got off of duty, so I'm a little tired, but whatever. So it's going to be $28,200, right? Like around there, if you want to control 100 shares. But with contracts, you control 100 shares for the fraction of the price, guys. You can go as low as $10 a contract, all the way to 12,000. It ranges but like maybe like an Apple contract right now is probably going like around $1,000 if you wanted to get like close to the money. So yeah, like controlling 100 shares, guys. Hell yeah, for the fraction of the price. You don't need to spend 28,000 to control that. So basically, you got the right to sell or buy the specific option at that specific price that you put in your options to be, right? The option works by you are basically putting a bet on the market that either the stock is gonna go up or it's gonna go down, right? If you expect to go up, that's what we call a call. That's what we call a call. You know what I'm saying? That's what we call a call. So, and then if you think that stock is gonna go down, that's when you put a put. So remember, call is up, put is down. So your steps will be looking at the option, looking at the stock that you want to trade, then going into options. Well, first you gotta open up a trading account, obviously. Then you have to go and open up a options account. A simple steps. You go in one, two. That's like 3, 4 steps that you gotta do, and then it's easy, really easy, guys. Um, then after that, you look at the stock that you want to trade. So let's give an example, right? Apple. You want Apple. You think Apple is doing really good, right? You believe that they're gonna go up. So what you would do is you will go to the expiration dates. Well, you will go to options. Then you will look at they have the expiration dates, they got the price, and they got how much you're gonna pay. That is called the premium. Then for the expiration date, the expiration means that basically you got to that date for the specific contract that you have to make the move, right? So if it goes past the date, you either have to lose your money or whatever. It's expiration. So you gotta either sell your contract or do whatever you gotta do you move before the expiration thing comes. So after that, so basically, let's say you want Apple. Let's look over here, guys. All right, guys, so let's look over here, right? So we see that Apple is trading at 289, right? 289 right now. So let's say, oh my God, you think that Apple is gonna go back to this level, right? At this price at 292. So what you would do is you go to options. First of all, you gotta make sure you get the options account. So yeah, you go to table and you go to options. So right here you see the calls, and right here you see the puts. So remember, if you want it to go up, you go for the calls. If you expect it to go down, you put the puts. So let's say you expect the stock to go to like maybe 290. That's like really close to the money. So you want a safe bet. So you will go right here to calls, and then you will look for the expiration date first. Let's just put all the strike prices, and then right here on the top you see that these are the expiration dates. May 8th is next Friday. May 15th is next Friday. Is the Friday after next. So for expiration dates, they all expire on a Friday. So yeah, so you will go, and then you will choose your expiration date. The further the expiration date is, the more expensive it's gonna be. So let's put let's give it some time, and let's put it to maybe be safe till the 22nd, right? So you're saying that the Apple will go up before May 22nd or by this date. So you will go, and then you will look at, let's say 290, right? 290 call. So you will go all the way down until you find 290. This is the current price, and this is the 290 call. So you will go right here. This is the ask and the bid. So ask price is basically what the stock market is, or the broker is asking for, and the bid is basically what they're selling it for. So you want to get in between these two prices. So maybe right now the market is closed, so I'm not really gonna get into the trade because it's closed. But you will choose it, and you see right here Apple blah blah blah. Apple 290 call May 22nd, 2020. So you will say buy, limit price. So basically, a limit price is a price that you are willing to pay. Market price is basically whatever price they will put you into, so it can be like the highest price. It's probably going to be the highest price because that's how they make their commission. So you'll kind of always want to go with limit because you will control what you pay and stuff. Stop and the stop limit is basically when you're selling, but we don't have to worry about these two right now. So limit price, and then one contract. Remember, one contract is 100 shares. If you want to do more, you can up or down. But right now, you want to get into one contract. The limit price will be, ask price is 10.1. The bid price is 8. So you can go in between, like 9.5, $9.50. And then day is, for the day, when the market is closed. When the market is open, sorry. And right here, it will show you the max loss and the max profit. So since you're paying $9.50 per share, But remember, you have to multiply by 100 because you controlling 100 shares. So total will be the premium paid. It will be $950. As you guys can see it right here, $950, $950. Not that bad for an Apple call, that is really really close to the money. I'm not saying you should buy this right now or anything like that. This is just an example. So the market, Apple might go even it might go down and all that, right? So I'm just showing you guys how to get into options right now. So don't take this as any type of example or me telling you to get in this trade or anything like that. So since you paying $950, it shows right here the max loss is gonna be $950. Last price, this is the price that is trading right now. The break even is $299. Break even is basically the break even because you're paying this. So as once you make this, you're basically breaking even because you pay this and you make 950s, equals zero. 950 minus 950, is equals zero, whatever. And the max profit, you see that is unlimited. That's why I love options so much, guys, because right here you already know what you're gonna lose. You're gonna lose 950 if anything, if you don't have risk management or if you just let the stock, just go. So all you're gonna lose is to 950. This is the max you're gonna lose. But the max profit, guys, let's say that it goes all the way to like $350 or something crazy like that. Apple just skyrocket, right? So this unlimited profit, you can turn this almost $1,000 into 10,000, even 100,000, guys. Like there's people that actually be making crazy amounts of money because when a stock shoots up, this the option also shoots up with it. So that's why I love options, and that's why I think you guys should, look into them. Let's go on the benefits. Now I show you how to get in the trade and what options are basically are, but what are some more benefits of it? Well, like I already mentioned, you control 100 shares without having to actually buy 100 shares. And that's what's so powerful. You can also leverage your money. Like you guys can see, you already know you're gonna lose those $950. But like I'm telling you, like if something crazy happens with Apple, they release a news like let's say, oh my god, whatever, Apple 20 or whatever, iPhone 20, and then the stock is gonna go all the way to like 350, 400 or whatever price, some crazy number, which is possible. It has happened before in so many stocks right there. Your profit is unlimited, guys. Like think about it. Turning 1,000, you can double it. Turn it into 2,000. Turn it into 3,000, 3,000, 10,000, 20,000, 100,000. So that's why it's so fascinating to me, the options world. So yeah, lower risk. So let's say you want to get into a company, right? Let's keep Apple as the example. So you want to get into Apple. And then you buy 100 shares. That's 28,000 and some change. And then let's say Apple all of a sudden crashes or like something wrong happens to it, and then like you lose, a lot of money. It goes from like $280 a share to like $200, right? So you just lost $8,000, guys. You lost that $8,000. But with options, you already know what the max loss is gonna be. So you can either like say like if you have like a good risk management, you won't even have to lose all that because you will know when to. You can have a plan of action. Like if the stock turns against you, you can just get out. So you don't have to really like stick into that contract until it expires. You can get out whenever you want. So that's why it's so amazing. Also, you can be $100 negative, and then you can be like, okay, I'm gonna get out. It's lose 100, but it's better than lose 8,000. Am I right? But yeah, guys, this is basically my strategy. That I use to, make money, like double, triple, even sometimes 10 times my money, which is crazy. But yeah, guys, that's my strategy, buying calls and puts. There's also like a lot more strategies out there, but like cover calls, naked calls, and all that. There's a lot of them, but they're a little more advanced. And then to be honest, I'm not really interested in that. The puts and calls are so easy to do and so easy to understand that I'd rather stick into one strategy, master it, and then make money, you know? Like, why should you like spend all this time and then you give yourself a hard time on, you know, like learning all these strategies when you only need one, and then once you master that one, like you can make tons of money with it, you know? So yeah, guys, that's my strategy. Like, but I'm gonna give you like a really important pointers. I'm gonna give you really important tips on it. If you want to start trading options, you have to. It's a must, guys. You need to learn first. You have to get the knowledge. You have to do your research, and then you know, I'm not a financial advisor or anything like that. I'm just, you know, showing you guys what I do, and then you can, and then it is your homework and it is your duty to go and, you know, find more research and find more knowledge for yourselves. There's so much knowledge out there, guys. And you got Google, you got YouTube. Come on, guys. Like, it's easy to get into this stuff, guys. All you gotta do is look. You gotta study this and then actually learn it and understand it, guys. Because there's a difference between, you know, learning and understanding what you're doing. You want to get to the point where you understand why you're doing what you do. You know, you gotta have a plan of action, and then don't be like me. Don't start trading with real money. There's some platforms right there, like, you know, Think or Swim, that will give you, you know, like $100,000 per paper money. So you can start trading with that, start practicing with that, guys. Because you don't wanna, if like, let's be honest, if you're barely starting, you don't know what you're doing. So obviously you're gonna lose money, you know. So you wanna start paper trading, and then go from there. You know, once you feel comfortable, start making, you know, actually good money. You know, start putting your own money into it, and start making them profits. Don't be like me, guys, because if you guys can see right here, I lost all this money right here. I think I thought I was gonna be a millionaire and all this, but I lost this money, you know. But you know, F it, you know what I'm saying?
It is what it is.
It is what it is. Guys, in later videos, I'm going to talk more about my strategies, and then like also get more into more detail into that. This video, I only want to introduce you guys into the options world, and then why you should, you know, stop. Like, you know, you should invest also, and if you want to make, you know, more profits and then like quicker money, then yeah, look into options trading, guys. So yeah, that's it, guys, for this video. I just wanted to give a quick summary and a quick explanation of the options world and my strategy that I use. So please, guys, give a like to this video, subscribe, and then also comment if you guys have any questions. Appreciate you guys watching till the end, and stay tuned, guys. Appreciate it.